and welcome to Blythe Way Business News. Today I'm joined by Dan Betts, the Chief Executive of Hummingbird Resources. Hummingbird is listed in London on the AIM market. It trades with a market capitalisation of around £114 million and has the ticker of HUM. Hummingbird is a gold miner and a gold producer, producing gold from its Yanfolila mine in Mali, but also interesting projects, which we will come on to, in Guinea and Liberia. But first of all, Dan, you've announced this week the fourth quarter production and the full year production figures. Let's have a quick look at 2020. We'll get the year ahead in a moment, but looking back at 2020, key thing there seems to have been strengthening the balance sheet.
Hi, Tim. Thanks for having me on. Yes, I mean, in Q4, the company did turn net cash, which is a big milestone for any company. I mean, we still have getting on towards $10 million of debt with Coris Bank, which will be due to be paid off in full by April of this year. But yeah, the inflection point of turning net cash is a big achievement for the company.
Okay, so you've reached the inflection point. We're cash flow positive. The debt's coming down very nicely, just a little bit of payoff. But we must look at the gold production. And I think you'll be the first to admit it wasn't what you hoped it would be in the last quarter. And indeed, the cost of production were up. I mean, what's been driving that, Dan?
That's right, Tim. I mean, 2020 was a challenging year. It started probably back in March with COVID and the border restrictions and reorganizing the mine plan to protect the plant from spares and processing more softer material. Then you remember there was a coup in Mali, that the borders were shut for another 6 weeks there. And I guess we were very dependent on Q4 in order to catch up some of those ounces. And as we entered a portion of the Kamana East pit called Kamana East 1, we were dependent heavily on the grade in that area of the pit to produce the ounces in Q4. And unfortunately, it just wasn't forthcoming. The grade control in that portion of the pit, just before you mine, you obviously go through a process of grade control to identify the ore blocks and put out the tapes to mark the ore blocks for mining. And the grade in that panel, in that domain, just didn't materialize and reconciled poorly with the resource model. And look, I think it's intensified by the fact we needed it at the end of 2020, but the reality is the ore body over the last 3 years of mining has reconciled almost perfectly with our resource model. We're within 2% in terms of gold produced versus the original resource model, which is excellent. That's an excellent reconciliation. But obviously on a week by week, month by month basis, the reconciliation between a global resource model and the very localized panels you're mining that are detailed with a grade control program fluctuate a great deal, and they go up and down. And unfortunately, this was an area that didn't reconcile that well. As a result, we produced less ounces, and that's the biggest factor on the AISC in the quarter. And that's it's there in black and white, and it's not a pretty number. But I think the important message is that domain at Kamana East 1, we've completed mining it. Most of the feed going forward in 2021 is from Kamana West. And you'll see from the guidance this year that we've put out, we're still anticipating a higher cost because we're deeper in the pits. Deeper mining has a higher cost. And the grade profile of the mining is 2.4 because we're 4 years into this. You know, ultimately, Yanfolila has paid back the debt that we borrowed, and we're now into a cash generative situation. But the ore grade is lower in these areas of the pit as we get to access the bottom of the pits where the grade should pick up again. In 2021, this year, it's our highest volume year in terms of tons moved. We're moving 3 million tons more than last year. So these factors all contribute to a high cost AISC at the moment. But I would just temper that with the fact that, as you said, we have become net cash. Yanfolila is now generating cash to support growth. And the story of Hummingbird from here is about extending the mine life, building the next project and becoming a multi-asset producer. But yeah, I mean, these things happen in mining, and I've certainly not been glib about that, Tim. It's something that the team are working extremely hard on to minimize dilution and maximize the grade that we can. But every now and again, you get surprises like that.
Okay, but I just want to reflect something back to you, Dan, because the results came out this week. Since then, I've talked to a couple of analysts who mentioned that their understanding is you've strengthened the management team at Yanfolila. I'd like to hear a little bit about that. And of course, retail shareholders have been concerned about the all-in sustaining cost of around 1,400. So 2 questions. Has the management team been strengthened? And is that all-in sustaining cost at Yanfolila going to stay, as far as you can see, constant for this year?
So on the management question first, Tim, we have a new general manager at Yanfolila who's been in place for 6 months called Edric Wolfhagen, and he's doing a great job. And a new mine manager who's actually come across from our contract miner, AMS. So he knows the project well. And despite the results in Q4 in terms of ounces produced, the operation is running very smoothly. If you look at tons mined, availability in the plant, throughput at the plant, Q4 was actually a record quarter. And if you think of that on the back of a very challenging year logistically, I think the team is doing very well. Actually, today, site delivered its 2 millionth lost time injury-free hour, which is an amazing achievement. So ironically, on the flip side of what is disappointing news, even though we had guided the market that production would be lower, the operations at Yanfolila are going very well. I think as we move to build Carusa, we could further strengthen that with a chief operating officer. But I mean, it's very, very important we make the right decision on that front, and we'll see if such a person is available.
Okay, so emerging from a difficult quarter with difficult actual physical mining, strengthened management team puts you hopefully in a better place. Let's look at the production guidance you're giving for 2021. Just talk us through that, and I think people have said it's quite a conservative number. Give us the explanation and the thinking behind that.
Well, yeah. So following on your second question is the AISC number for 2021 sustainable? I mean, you'll see we certainly don't think or hope it will continue at the level of Q4 2020. We think it will come back down, and we've given guidance of 1,250 to 1,350. The biggest 2 components of AISC are obviously ounces produced and your mining cost. The mining cost is by far and away the biggest component of our operating cost at Yanfolila, and that component of our cost is real. I mean, we're doing more drill and blast, we're mining harder material, we're deeper in the pits, so there's longer hauls, and the mining cost is up. As I say, we're moving 3 million more tons of material this year than last year, but that was always anticipated. I guess the bit that has been reduced is the production of gold, and reducing that from probably 115,000 down to the guidance of 100 to 110 has an impact on AISC. But the reason we've done that is because we have based it on the realistic performance data of the last 3 years, modeling in internal dilution, downtime in the wet season, processing rates, and I think it is realistic, and we're all obviously committed and bought into the fact that we can commit to that budget and timeline. I think it's sensible and prudent management, and on that basis, even what might seem a conservative guidance, we're generating an awful lot of EBITDA at this level.
Generating a lot of EBITDA, and I suppose that's reflected in the fact that you've had the confidence to, I think, more than double your exploration budget. So give us a bit of insight into why that's gone up.
Well, I think you've got to continually try and learn from your mistakes, and that's an ongoing process. And we were at Yanfolila, we were very capital constrained when we bought the project, and as a result, we were very late to the exploration game. It's we were focused on building the plant on time and on budget, but it's always had quite a short mine life. In 2020, we've spent $5 million on exploration, and we look to bring out a resource, mineral resource update at the end of the quarter when all those dates are collated. But you'll see from all the drill results that have been announced, some excellent drill results in terms of both confidence in the known resources and new discoveries around Sanamali East. Ultimately, it's a function of dollars spent, Tim. And I think if we spend more on exploration at Yanfolila, we'll find more gold.
Okay, let's move you on from Jan Falila because, as I said at the start of the program, Hummingbird is a multi-asset and multi-site operation. So let's have a quick word, if we may, about what will probably be the next production asset in the portfolio, going to Carusa in Guinea. What's the progress at Carusa?
Well, the team's been working hard doing sort of engineering studies to refine the processing plant and the capital cost build-up for that project. Before we can start construction, there's a number of things that obviously needs to happen. Notably, we need the mining license from the Guinea government, which I believe will be forthcoming shortly. And then we need to commit to a funding structure and a capital cost and execute. I think it's realistic to assume that project will probably start later this year. The exact timing of that is dependent on a number of factors, not least when we can mobilize. I mean, if we were to start that project now with the border restrictions and COVID controls, it would be almost impossible to mobilize an EPCM contractor to site, establish camp and get going. So the way we're looking at it is realistically, there's probably a 6-month window now where we can de-risk, optimize, and capitalize on this window of time to improve the project.
Let's turn to the third part, the third asset in the portfolio. And I know, having spoken to you before, this is pretty much where Hummingbird started. Of course, I'm talking about the Dubi project in Liberia, where you made that very brave decision or realization this might have been something just too big for Hummingbird to take forward when you first launched the company. It sat on the balance sheet with basically no value. It was costing you money to keep it there every year. And then last year you managed to do that deal with your Canadian colleagues and partners. Give us a quick update what they've been up to in Dubi.
Well, I mean, actually, Ian Stalker, who's the chief executive of Pasofino, is actually Scottish, but he lives in Vancouver. But it is a Canadian outfit, and Steve Detells, who's behind Pasofino, is a great track record of building up assets and selling them for good value. So they're busy working away, trying to satisfy the earning conditions of the joint venture, which is namely to commit to exploration and delivering a feasibility study that requires a lot of infill drilling to convert inferred resources into indicated resources. They've mobilized, they've rebuilt all the infrastructure, they have drill rigs turning, and I think they're making good progress towards those goals. And I think you're going to see a lot of news flow coming out of Pasofino this year. And I would just draw your attention to the fact Pasofino has a market cap of 50 million Canadian dollars now, and it hasn't really done anything yet. So once they get the drills turning and start delivering numbers on a realistic feasibility study, I think we should see some positive news flow and value created there. And obviously Hummingbird retains a 51% interest.
There you go. Very good news. And we look forward to seeing the updates on both Carusa and Dubi. I can't let you go, Dan, because quite rightly, these days, every mining conversation features those 3 letters ESG. And I know it's always been dear to your heart. You probably have a bit of a wry smile because people talk about ESG now. You've been talking about it for donkey's years. What's been happening in terms of community activity, community investment at the sites in Hummingbird?
Well, I mean, at the site level, there's always a huge number of projects that are ongoing. I mean, 2020 was dominated by COVID and a lot of community health programs and training programs and dealing with the community clinics. But there's also a lot of conservation projects, tree planting projects. We're training locals to make honey, chicken farms, market gardens. There's a huge plethora of projects that are ongoing in Hummingbird with an ESG flag. But for me, really, the whole game here is a bit bigger picture, and it's to develop the single mine origin idea that we've developed, which is the traceability of gold from responsible projects all the way through to retail jewelers. So it ends up becoming retail led. And if you go into a jewelry shop, like, for example, Boodles, who have adopted the single mine origin brand, you can see on a QR code on the ring that you buy, you can scan it, and it will say this gold came from Yamfalila. Here are the community projects they're doing. Here are the environmental projects they're doing. And if we can get the industry to embrace this and other mines to sign up to it, and the retail industry to showcase it, I think it would just be an amazing platform to showcase all the amazing work the mining industry does. You know, the mining industry sort of hides everything it does under the blotter because it's has a bit of a guilty or a bad reputation, let's say. But I see that totally differently. I see it as an industry that's doing great things, and we should shout about it.
Well, it's good to hear. Finally, before I let you go, looking forward to 2021, what's the one thing that you would like, when we look back in a year's time, what would you like to look back and say, 2021, that was the one great thing that really stands out for me?
I just want to deliver on the guidance and the performance that we've set. You know, I don't want any surprises. All the growth, all the exploration upside, Doobie, it's all great and should create tremendous value. But Hummingbird really needs to just deliver consistently, I think, that's the first goal.
Well, Dan, good luck with that. I look forward to having you back and hearing more about the progress throughout the year. That was Dan Betts, Chief Executive of Hummingbird Resources. As we said, Hummingbird is listed on the AIM market. You can find it with the ticker of HUM, and they will continue growing this serious mining business and producing gold. That's all from Blythe Business News for today. Thanks for watching.